How to never get denied by a bank. This is definitely the number one question that I always receive from any platform that I'm on and I'm posting on. Because let's just face it, most of you guys just don't know how to not get denied. No one was ever taught how to even apply to the bank and get approved, let alone not get denied. So, I mean, why do you even want to get approved anyway? Most people are going to the bank for a few $1,000s to do some renovations in a house, maybe get a little credit card that could have for gas. And those are all cool reasons. But the true reason why anyone should be applying to a bank is to better their financial situation and get access to capital that could really free them from whatever situation they're in and free them into a whole new atmosphere of life. I'm telling you guys, business funding has set me free. It has made me become the person that I am. It has given me access to capital that I may have probably not ever seen in my lifetime. So when I tell you, you need to take this serious, it's not just a simple application. You got to really take this serious because this could change the trajectory of your life and the lives of the little ones that come behind you. So let's get into it. For all the people that can't wait and need all the answers up front in the video, here's the list of the things to do. 1, get an LLC or an INC. 2, make sure your credit report is substantially good, meaning you need a 700 plus credit score. 3, you need 3 to 5 personal credit cards. 4, they should be all seasoned credit cards, 24 months or more. 5, make sure they're reporting to all credit bureaus. 6, make sure that the credit limits are $10,000 or more. 7, make sure you have no derogatory marks on your credit report, charge-offs, late payments, etc. Now, let me break each of these down. Let me set this disclaimer. This video here is for everyone. It's not just for the entrepreneur. It's not just for the real estate investor. It's not for just that person that is trying to become a better person and have more access to capital. This video is for your average American with a 9-to-5, with a corporate job, or maybe you have no job. This video is freedom. And I know what you're thinking. Hey, Prada, I already have a corporate job. I'm making $80,000 a year. I got my children. What do I need a business loan for? And the fact of the matter is, your business loan is going to allow you to access capital that you typically don't have access to now, which will allow you to make investments that you couldn't make usually because you didn't have the money, right? The 9-to-5 that you're working, the corporate job that you're working, you're making that money, and that money's going to bills, it's going to everything else that, is sustaining the lifestyle that you're living, but you don't have anything extra to be able to invest. So this is what business funding would allow you to do. You probably have an idea. You probably thought about something in the past and, you kind of just nixed it off because you don't have the money to do it. That's how most ideas go to waste because we don't have the money. We can't afford to, invest in it. So we typically just ignore it. And this is what we don't want to do. We want to be able to take advantage of those great investment ideas that come across from friends, family members, or even some of your favorite YouTubers or gurus online that you want to do business with, but you can't because you don't have any extra funds. This will allow you to do so. A business loan will allow you to be able to do so, right? And I'm going to teach you exactly how to never get denied by the bank in 5, 4, 3, 2. Now, let me be straight with you. This is business funding, okay? This is not personal funding. We're not getting personal credit cards. We're not getting personal loans. We're not getting anything on the personal side in order to make investments. Everything that you're going to do for your investment, all the funds, all the capital, anything that you have access to will be on the business side because the business side is just much better than the personal side, right? The business side doesn't report the high utilization. It doesn't report that business loan to your personal credit. And with that, you can continue getting more business funding as needed because you don't tarnish your personal credit profile. I did a whole video on business structure and what you need to be able to go into the bank with your business entity a while back. Make sure you check that out. But today we're going to talk about your personal structure, which determines how you get approved for business funding. Now, in order for business funding to exist, you need a business and also a personal profile that is substantially good. Okay, now let's talk about that personal profile. First thing I need you to do is forget anything that you've been taught online about personal credit structure. All right. Everybody online is confused on what you actually need, and I'm going to give you information and advice based on data over the last 10 years of business funding. I'm talking about denial, approvals, all type of applications that went into several different banks, and we have put all of that data into one big pot, stir it up, and spit out this formula that's going to get you approved 9 out of 10 times when you do an application. Now, this formula consists of one, the very first main thing that you need to understand. You cannot have tons of credit available on your personal side, right? There's a such thing called too much credit. Anyone who has too much credit is also looked at as a liability to the banks. Because here's the thing, we just came out of a pandemic not too long ago, right? And in that pandemic, this is how the banks are looking at us. Well, pandemic hits, what happens? Most people don't go to work. What happens when you don't go to work? You don't get money. When you're not making money, you start looking around at all the different bills that you have and kind of weighing them to see which one's going to get paid and which one's not. Okay. Well, you got an auto loan. Well, you need your car, right? You got a mortgage or you're paying rent. You got to have somewhere to live. So we start going down a list. You got a light bill. You need light in your house. Utility, you still need entertainment, you want to watch YouTube, you want to watch cable, whatever have you. You start looking at that credit card or that business loan or that personal loan. And that's kind of like the last thing on a list. So when you have too much available credit, the banks are saying, well, in an event of a disaster, we'll be the last person to get paid. You'll probably run up our credit card. You'll probably use all the business loan funds and you won't pay us back. So the banks are really skeptical about people that have too much personal credit available. So we're going to keep our personal credit limits in between anywhere from 30,000 to about 100 and 120,000. That's a really good place to be. Now, with those $30 to $120,000 worth of credit available, you only need 3 to 5 personal credit cards. Only 3 to 5 personal credit cards. Unlike the 10s and 20s that everybody is telling you to go after online, you only need 3 to 5 personal credit cards. And of those 3 to 5 personal credit cards, they all should be revolving credit cards. That means they should not be charge cards. Now, what's a charge card versus revolving? Well, a charge card typically means whatever balance that you have has to be paid within a 30-day cycle, right? You get like a net 30 in order to pay for that credit card limit, okay? That credit card balance. Now, a revolving credit card allows you to hold a balance over time and you could pay that balance down without having to pay it in full, all right? Now, the reason why we want revolving is because the revolving has a ceiling. That ceiling is your credit limit. Let's say that credit limit is $10,000, okay? And you've used 30% of that, meaning you've spent $3,000 of the $10,000. Well, the bank now can see your utilization, which is a really good and very, very big factor for your credit report. Now, with your charge card, there's no ceiling. They have no limit. So utilization cannot be determined, which also doesn't benefit your credit report and give you the points that you need in order to get approved by the banks. So we stick with revolving credit cards, not charge cards. Now, I'm not going to tell you to go and remove these credit cards if you already have them. That's a whole different video. We'll talk about that later. But what you need to focus on is having 3 to 5 personal credit cards, all revolving. And here's the other caveat. They all should be reporting to each and every credit bureau. You won't believe how many credit reports I've seen where a credit card is only reporting to TransUnion or Equifax or Experian. They should report to all 3 credit bureaus. Why? Well, why spend time with a credit card, right, building credit if they're not giving you a full benefit to your entire credit report? They're only reporting to 1, maybe 2, not all 3. Now, of those 3 to 5 credit cards, you also have to keep in mind you should be getting the best of those credit cards, right? And we label our credit cards in tiers, 1 through 4. Now, tier one is your national banks, okay? Chase, Bank of America, Wells Fargo, Citibank. Tier two, your regional banks, American Express, Capital One, TD Bank, Capital One. I just said that. All right. Hold on. Key Bank. There's a few out there that you can determine if they're regional just because they're in certain parts of the world or certain parts of the US. Tier threes are going to be your tier threes are going to be your community banks and your credit unions, right? And finally, tier fours are going to be all the poop cards. That's First Premier, that's Open Sky. Those are all the merchant credit cards like Macy's, Lowe's. These are cards that don't fill up your credit report to make it that someone else wants to buy or someone else wants to lend to you. Having a Macy's credit card is not going to make Chase want to give you a credit card. It's just not going to happen, right? Now, if you want me to break down the tiers more in detail, drop a comment below and I'll make a video just for you. So we're going to stay away from all tier four poop cards, and we're only going to focus on tier ones to tier threes for our 3 to 5 credit cards. This is going to make you look really good to the banks. In addition, I want you to make sure that each of those 3 to 5 credit cards have $10,000 or more per credit card. That's $10,000 or more credit limit. All right. Now, how do you do that? If you're at a $5,000 credit card limit right now, every 60 days to 90 days, call your credit card issuer and ask them for a credit limit increase. Most of the time, it's a soft pull. Sometimes it's a hard pull. If it's a hard pull, it's up to you whether or not you want to do it or not. But you need to get those credit limits up because whatever you have on a personal side, you're going to get 3x on the business side. Meaning, if you have a Chase credit card that has a $10,000 limit, well, on the business side, you can get anywhere from 20 to 30, sometimes even $40,000 on the business side. Now, it's not over yet. You're not quite ready to walk into the bank. This is a major misconception of credit limits and credit reports and how to utilize your credit report in order to get business funding. Most people think that you should have a utilization rate of about 30%, right? And that is not going to get you the funding that you need on the business side. Per credit card, each of those 3 to 5 credit cards, we need to be looking at a 10% utilization rate or lower. The closer you are to 1%, the better. Now, a 10% utilization rate means, hey, I have a $10,000 credit card, and in order to be at 10% or lower, that means I have to report no more than $1,000 or less per month. That's 10% or less. All right. $10,000 credit card, meaning you only have $1,000 utilized. That's it. Very simple. So do the math based on your credit card limits and make sure before you go for funding. Now, you could carry limits all you want, but before you go for funding, you're at 10% or less. This is going to maximize your approval rates. Now, this is from most of my people that's out there that's rebuilding credit, or maybe you're new to credit. Maybe you're 18 and you're trying to build credit and eventually get funding. A lot of people get denied because they have thin credit profiles or very new credit profiles. And in order for your credit profile to be seasoned, those 3 to 5 credit card should be anywhere from about 24 months or more to become seasoned, right? Now, if you have a brand new credit card and you're 6 months in, 8 months in, you still may get approved on the business side, but just keep in mind, the closer you are to 24 months of age, the better. So, hey, listen, if you need funding today, go for it. Just always understand the season mark is 24 months. Now, to really beef up your credit report, you should have some installment accounts, right? What's an installment account? Well, we're talking from top to bottom, talking mortgages, we're talking auto loans, we're talking personal loans, we're talking secured loans, we're also talking student loans, right? Now, if you have any of these loans reporting to your credit report, don't rush and pay it off, because every month that you're paying it, you're showing the creditors and the credit bureaus that you're really good with money, right? It's much different than your revolving accounts. Revolving accounts, hey, you can pay the minimum payment every month and you could keep that relationship going for a long time. But with a loan, an installment loan, well, you have to pay a set amount each and every month for a duration of, whatever the term is. So that gives a really strong reporting to the creditors and the credit bureaus. And this in turn will allow you to get approved for funding that you need. That's installment loans. Now, before we walk into the bank, before we apply for that credit card, that business loan, let's get down our inquiries, okay? And I'm talking per credit bureau. What's a credit bureau, Prada? TransUnion, Equifax, Experian. You can look on your credit report and see how many inquiries you have per credit bureau. Now, my rule of thumb is to be 3 or less before going for funding. Now, a lot of people, they rack up a whole lot of inquiries by getting, a auto loan or maybe a mortgage. And those items can be removed. Those inquiries can be removed. Now, if you have more than 3 inquiries per credit bureau, I suggest you get credit repair. And if you guys need help removing those inquiries, I have a trusted source that have helped thousands of my clients. I'll drop the link below and you guys can tap in with them. Now, this should go without saying, but for those that are new to credit, for those that have never really understood why they keep getting denied, here it is. No one should be applying for any business funding if you have derogatory marks on your credit report. That's including collections. That's including charge-offs. That's including repossessions. That's including foreclosures. That's including late payments. If you have any of these items reporting on your credit report, I need you to find the nearest credit repair agency and get those things removed so we could go back and get the business funding that you're looking for. Once again, I have a trusted source that has helped thousands of my clients. I'll drop the link below and you guys can tap in. So the moral of the story is, listen, I don't care if you have a $40,000 job, getting paid $80,000 a year. We all could use more. And in order to get more, we shouldn't be trying to trade our time for money, meaning finding more jobs and more work in order to supplement that income. The only way to do it, the number one way to do it, is to invest. And in order to invest, you need to access capital. You need money. And if you don't have that money today in your bank account, you need to go and get it from a bank. The same way I've just taught you, this is how the rich people do it. This is how all the investors are out here doing it. These are how the people that seem to not come for money are accessing capital. And if you need any help with this, any help at all, you want me to break down any of the tiers that I talked about, how to set up an LLC, just comment below and I'll go back and I'll make a video for you, right? And if you liked anything today, hey, give me a quick like, give me a quick subscribe. I'll be dropping a lot more of this content for you. And I'll see you next time. Let's get active.